Hello and welcome to KFX Trading. If you're new, please smash that like and subscribe button. We've been talking about ranging markets, and every example I can find, I'm trying to capture it, record it, and then quickly post a video on it. So in the first couple of videos, we discussed trading within a ranging market, how important it is to look from where the market came from to that ranging market. If we were trending to the upside, then started ranging, or if we were trending to the downside, then started ranging. We looked at two trades inside of a ranging market. We then look at how to trade when the market breaks out. And now we're going to actually look at the other way of trading a ranging market, and that is when you've got it's called a somewhat of a fake breakout, but then the market pulls back into the range and again starts to respect the range. What do I mean by that? Well, let's just have a quick look at this one. So if you see, the market was ranging. We've then broken out of this range, pushed to the downside, a clear strong push, but then we've retraced strong. We've broken back inside of the range, come back to our support and pushed up. So the market has respected the range again. Luckily, I was able to capture a trade just like this. So let's go and have a look at how it played out. Okay, we've got a ranging market. Market's in a clear range. Why? Well, you can see the support zones here we bounce from, the resistance zones here we bounce from. Now the market's pushed down and we've broken below this range. So this is absolutely lovely. I was anticipating we're going to come back, find area of resistance here and push down, but notice this retrace. This retrace had no red candles. It was just a super strong retrace. That is a huge sign telling me, hey, we're retracing too strong. The bulls have pushed it back up into the range. We might respect the range. So if you have a look, the market pushed up, retraced, and gone back inside the middle of the range. So I'm waiting for a retrace back to this area of support and hopefully get a trade back to our resistance, hit our targets, with the theory that the market is going to respect the range once again. So let's see what happens. We're pulling back, which is quite nice. Okay, I like this. I'm going to go ahead and I'm going to put a buy order in. Let's just see what happens. We're even bouncing on this 9 SMA by the look of it. Okay, oh, we pushed down. So we've pushed down deeper into this. We're rejecting it, which is quite nice. Let's see what price action we get. All right, I like this. This is a morning star. Bang. All right, we've put our order in. I'm going to put my targets right here, just at the beginning of this resistance zone. So why do we take this setup? Let's just do a quick recap. The market was in a range. It's a clear range. We're pushing up. Oh, that's beautiful. That's just playing out beautifully. Market was in a range. As you can see, here's our resistance zones. Here's our support zone. The market broke out of the range, pushed back up inside it. We've gone into the middle of the range. We've come to our support and we formed a morning star. Again, price action is king. We've put our buy order above in anticipation that the market momentum is going to push us up and the market is going to respect the range once again. And hopefully from this bounce up, we're going to hit that resistance zone, hit our target. So another beautiful textbook trade. We're starting to struggle a bit. The reason we're struggling right now is because the market prior to this was very bearish and we're pushing to the downside. So it is more high probability to take bearish setups. However, I never got that third hit. So I never took a bearish setup here. I didn't take any of these bullish setups because the market is bearish overall. But here we are, we're bouncing. We're failing to break the 9 SMA, which is a really good sign. Let's just see how it plays out. So close. Target hit, absolutely beautiful trade, textbook trade. Let's now jump back over and explain this in detail. Okay, here we are using this diagram. These little diagrams are absolutely beautiful. Now, this market was pushing to the downside, so we had a bearish market. We've started to range. This is why I never took any bullish setups. Also, I always like to hit the third touch. Don't like to hit it before because it's just prior to the third touch, it's not really confirmed that it's a range. So we had one touch here, two touches here. Market, what did the market do? The market broke out. So we broke out to the downside and then we retraced. Most of the times when you have a breakout and a retrace, if you watched the previous video, you would have seen a continuation play to the downside. However, the difference to this setup is that the retrace. So the retrace is really vital and pivotal. The retrace was all green candles. You can replay the video and see that. It was all green candles. It was not one red candle and it was like 8 green candles. So the push and retrace back up was really, really strong. We pushed back up to the center of the range and then retraced back to this support area where we got a morning star formation. Absolutely beautiful price action. Took the long setup. It took a while. It took a bit of a grind to push up and hit our target. And the reason it done that, because we're in a bearish market. But these are high probability trades because the market likes to respect ranges if it's broken out of them and pulls back into the range. Hope that makes sense. Hope I've explained it as clearly as possible. Like I said, this is a ranging market this time of the year. And these are the several ways you can trade a ranging market. So within the range, you can trade it. A breakout, you can trade it. A breakout, a pull back in, and a re-respecting of the range. So that's your 3 ways to attack a ranging market.